Hi, my name is Sandeep and I'm the policy analyst here at Minance, and today we're going to be talking about the RBI's policy meet, which is supposed to occur on the 6th and the 7th of February. This is the last policy meet of the financial year. The meet usually occurs once every 2 months, with the last one happening in December. At the December meet, there weren't any major changes. They kept the lending rate stable at 6%. But they did estimate inflation to be as high as 4.75% by the end of the financial year. The RBI has a tendency to overestimate its inflation rates, but this time that hasn't been the case. Consumer price index told us in December itself the inflation was as high as 5.2%. Beyond this, crude oil prices are expected to rise all over the world, which will add an upward pressure on inflation. The government in its budget announced that it would introduce a minimum selling price for all crops, which is really at 1.5 times the production cost, which will also add an upward pressure on retail prices. Government bond yields as well have been rising, which means bond prices have been going down, which also has a positive impact on inflation. Now, it's well known that the RBI's main priority is to curtail inflation. This is one of the reasons why it's very hard for them to reduce policy rates, in spite of the fact that many people from within the government itself believe that they should. But they might be justified in not doing so far. Now, the big question is, what will the RBI do in the next policy meet, given the fact that inflation is almost certainly going to rise? In fact, we know for a fact that it is over the next few months. The RBI has two options here. Now, they can either increase the lending rate to protect against the rising inflation, or they can do nothing for the time period. Experts believe that on the 6th and the 7th, they won't make any policy changes, and this is primarily due to the effect that the budget has had on the market so far. Over the past few days, markets have essentially been in free fall, and if the RBI were to raise its policy rates, this would continue to have an adverse impact on the markets. Therefore, it's quite likely that the RBI would probably not do anything with respect to the lending rates, but it is more than likely that in the next few meetings, the next meeting is supposed to occur in April, which will be the first one of the next financial year, they will definitely be way more hawkish on lending rates and inflation in general. Now, if inflation has already overshot the RBI's estimate and it's well beyond 5%, the RBI has maintained that it wants to keep it around 4 or 4.5. So if it continues rising to say 5.5 or 6%, it could get to a point where the RBI will start increasing the lending rates to maybe 6.25% or 6.5%. And that's all we have for you today. Thank you.